Ever pondered what's brewing in the stock market today, especially with the S&P 500 and Nasdaq futures? Well, wonder no more. The U.S. stock market is a bustling hub of activity, with stock futures making impressive strides. On this fine Tuesday, key inflation data came in hotter than expected, setting the stage for both the S&P 500 and tech-heavy Nasdaq 100 futures to add to their gains. The S&P 500 futures rose by 0.5%, while the Nasdaq 100 futures were about 0.8% higher, all after 2 days of losses. Not to be left behind, the Dow Jones Industrial Average futures also saw an uptick, albeit a modest one at 0.2%. So why are these gains happening? The answer lies in the recent inflation data, specifically the Consumer Price Index release. This index is a crucial piece of the puzzle for the Federal Reserve in deciding its next policy move. The headline inflation met expectations with a monthly gain of 0.4% in February, following a 0.3% rise the month before. But the core CPI, which leaves out food and energy prices, rose by 0.4% on the month and a 3.1% gain on the year, both higher than estimates. This data is significant, given that Fed policymakers have expressed their intent to ensure inflation is easing before they start to bring rates down from their historically high level. Pre-CPI release. S&P 500 traders were hedging moves of 0.9% in either direction for stocks. As we can see, the stock market is a dynamic entity, constantly responding to a myriad of factors. Whether it's the performance of different futures, the release of key economic data, or the policy decisions of the Federal Reserve, the market is always on the move, reflecting the ever-changing landscape of global finance. Now let's delve deeper into the core of the matter, the Consumer Price Index release. The Consumer Price Index, or CPI as it's often known, is a crucial piece of economic data. In simple terms, it's a tool used to measure inflation, tracking the change in prices of a basket of goods and services that we typically buy. It's like keeping an eye on the price tag of life's essentials, from your morning coffee to your apartment rent. Why is this important, you ask? Well, it's one of the key metrics that the Federal Reserve uses to set interest rates. If the CPI is high, it means prices are going up, and we've got more inflation. This could prompt the Fed to raise interest rates to keep the economy from overheating. On the other hand, if the CPI is low, it suggests prices are stable or even falling, and the Fed might lower interest rates to spur economic activity. Now, the CPI release is a bit like a report card for the economy. The recent data showed a monthly gain of 0.4% in February, following a 0.3% rise in the previous month. But the core CPI, which gives us a clearer picture by stripping out volatile food and energy prices, showed a 0.4% rise on the month and a 3.1% gain on the year, both higher than estimates. This is influential stuff. Fed policymakers have said they want to be sure inflation is easing before they start to bring rates down from their historically high levels. And the stock market? It's hanging on every word. Before the CPI release, S&P 500 traders were hedging moves of 0.9% in either direction for stocks. Clearly, the CPI print holds significant sway in the stock market, shaping the course of Federal Reserve policies and inadvertently the fate of stocks. It's like a barometer, giving us a reading of economic conditions and a hint of what's to come. So, next time you hear about the CPI release, you'll know it's not just about numbers. It's about the story those numbers tell us about our economy. Moving on to the world of cryptocurrencies, Bitcoin seems to be enjoying a record-setting rally. Now, if you've been following the crypto market, you know that Bitcoin has always been known to be a bit of a roller coaster. But this year, it's been more of a rocket ship, skyrocketing to new heights and showing no signs of coming back down to earth anytime soon. Let's talk numbers. Bitcoin has seen an almost 70% gain this year. Yes, you heard that right, 70%. In an economy where traditional markets are battling inflation and interest rates, Bitcoin seems to be dancing to its own beat, and investors are loving the rhythm. Just to put things into perspective, Bitcoin started the year at around $42,000. Fast forward a few months, and it's risen to a whopping $72,120. That's a $30,000 increase in just over 2 months. It's quite a staggering figure, isn't it? And it doesn't stop there. Some market enthusiasts are predicting that Bitcoin could reach as high as $350,000 this year. Now that's a figure that could make even the most seasoned Wall Street veterans do a double take. Now I know what you're thinking, is this just another bubble? Well, the truth is no one really knows. The world of crypto is as unpredictable as it is exciting. What we do know is that more and more investors are turning to Bitcoin and other cryptocurrencies as a hedge against inflation and market volatility. In other words, Bitcoin isn't just a high-risk, high-reward gamble anymore. It's becoming a staple in many investors' portfolios, a digital asset that's proving its worth time and time again. So whether you're a crypto enthusiast or a Wall Street veteran, one thing's for sure: the cryptocurrency market, especially Bitcoin, is proving to be a force to be reckoned with. Switching gears to the corporate front, Oracle and Nvidia are making waves. Oracle, the renowned database giant, is showing promising strides in the realm of cloud computing. This progress has not gone unnoticed by investors, as Oracle shares saw a notable 12% jump in pre-market trade. A significant factor in Oracle's recent success can be attributed to a strategic partnership with another titan of the tech industry, Nvidia. Known as an AI chip giant, Nvidia's involvement with Oracle presents an exciting development in the tech world. This partnership is an ingenious blend of Oracle's strength in database management and Nvidia's prowess in AI and graphics processing. It's a union that promises to boost Oracle's cloud computing capabilities, a key area of growth and competition in today's tech market. The tie-up has been met with positive reaction from the stock market, reflecting the potential investors see in this collaboration. The partnership is expected to drive innovation, strengthen Oracle's cloud services, and expand Nvidia's reach in the enterprise market. Oracle's move towards bolstering its cloud computing capabilities is a smart one. As more businesses migrate to the cloud, demand for cloud services is skyrocketing. By teaming up with Nvidia, Oracle is positioning itself to meet this growing demand and compete more effectively with other cloud giants. On Nvidia's end, the partnership expands its influence beyond the consumer market. Nvidia's AI chips, which are already highly regarded in the tech industry, now have a chance to shine in the enterprise market, thanks to Oracle's extensive network of corporate clients. In essence, this collaboration between Oracle and Nvidia represents a win-win situation. Both companies stand to gain from their shared expertise and resources, and the stock market is responding accordingly. In the corporate world, strategic partnerships such as Oracle and Nvidia's can significantly influence stock performance. To wrap things up, let's revisit the key points we've uncovered today. We've seen that the U.S. stock futures have continued their upward trajectory after Tuesday's surprising inflation data. This hot-off-the-press key inflation data has set expectations for the timing of a Federal Reserve interest rate cut. The S&P 500 futures rose by 0.5%, while the tech-heavy Nasdaq 100 was up by roughly 0.8% after 2 days of losses. Not to be left behind, the Dow Jones Industrial Average futures also saw an increase of 0.2%. But what sparked this growth, you ask? Well, the market has been digesting the release of the Consumer Price Index, a critical data input for the Fed in deciding its next policy move. The headline inflation met expectations with a monthly gain of 0.4% in February, after a 0.3% rise the previous month. But the core CPI, which excludes food and energy prices, came in at a 0.4% rise on the month and a 3.1% gain on the year, both higher than estimates. As we've seen, the crypto market is not lagging behind either. Bitcoin, the leading digital currency, has continued its record-setting rally, rising to a whopping $72,120. This surge in the inflow into crypto assets has resulted in a nearly 70% gain this year alone, causing speculators to predict that Bitcoin could reach as high as $350,000 this year. And finally, on the corporate front, Oracle shares have jumped 12% in pre-market trade. This jump comes on the signs that the database giant is making significant strides in cloud computing, thanks to a collaboration with AI chip giant NVIDIA. That's a wrap on today's stock market report. Remember, the market is a vast and complex entity, but with a little bit of insight and understanding, you can navigate it with confidence.